G'day folks, Jim Langlands here from FX Charts with a foreign exchange update for the Finance News Network for the 24th of April on behalf of AxiTrader. So it was all about Europe again overnight really, following the French election results yesterday. The Dutch government resigned overnight over the inability to agree on the austerity measures that are required, and now an election needs to be held there probably sometime in the autumn. Following the French election yesterday, we've got the Greek election result ahead of us on May the 6th, when the final round of the French election also takes place. The head of the German IFO Institute said overnight that Greece should exit the euro in order to become more competitive again. And while this is probably a pretty fair comment, it won't do much to assist the unity in the EU. Softer data out of Germany and France also didn't help. Both the manufacturing and the services sectors PMI were weaker than expected and kept the pressure on. Equities were hit pretty hard. The DAX was down just under 3.4%. Elsewhere, the southern EU bourses were down about 4%. And things are not looking all that good on the equity side at the moment. The S&P just closed down about 0.8%. The euro, though, it held up pretty well, I think, really, considering it went down to just above 131 and has bounced from there. But the pressure looks to me as though it's got to remain on the downside. Having said that, the market's trading from a very short bias, and so squeezes to the upside are possible. There's good support at between 130 and 131, but if we get under 129.70, there'll be some serious stop loss selling, but that doesn't look to be due to happen today. Elsewhere, sterling was a good performer today, particularly on the crosses, and also held its own against the dollar. Likewise, the yen was mildly stronger, and that's trading around 81.15. The major interest today will be on the Aussie. We're waiting for the CPI numbers at 11:30. It's been down to 102.70 overnight. It took out the bids at 103, got down to 102.70 following yesterday's pretty awful PPI numbers. And if the CPI is anything like that, we're going to be looking towards a 50 basis point cut rather than 25 points. But having said that, the market expectations for a rise in the CPI today are about 0.7 quarter on quarter. And if that's the case, I think the Aussie's probably largely written in much of what could happen there. As I say, it's been down to 102.70. There's good support at 102 and a quarter. If the CPI number's stronger, of course, we're going to get a bit of a bounce, and that could take us above the top of the channel that we're trading at the moment, and back up to 104, 104.50 area. That aside, the New Zealand dollar was the only other point of interest. That dipped a little bit after Prime Minister John Key said that he thought the currency was overvalued. Went down to 80.70, but it's bounced from there to roughly about 81 and a quarter at the moment. So that's really about it today. The main point of interest, as I say, will be the CPI at 11:30. As usual with any currency outlook mentioned here, it constitutes a personal opinion only, so don't use it as trading advice. But if you do wish to see a more comprehensive outlook of the market for the next 24 hours, go to the website as usual, www.fxcharts.com.au. Thanks very much. Bye.